love the channel and find it useful in becoming a happy retiree. Subscribe today.
This is Seth.
Seth, welcome to the show. I'm going to say Seth from
Dacula.
Or I was going to say Georgia, and I still would have been semi-right on that, Seth. So what's going on, man? How can we help? Welcome to the show.
I believe I know a few things, and I'm calling to get your opinion on this. Right now, OPEC is trying to freeze their production, right, at a certain limit, which is almost the maximum of what they could do. At the price of oil per barrel right now, it puts it in the $50, $55 range. So part of my question is, how long do you think that would continue? And do you think at that range, some of the companies that were harvesting oil from shale, pulling it out of the ground through the shale deposits, would be able to either open up or even make a profit at that margin for the foreseeable future? In other words, is it worth investing in those companies or the pipelines that might transport that oil once it is drawn out of the ground?
So there's a huge difference. And again, if you look at what's happening with this OPEC deal, it's one of the first times that we've seen supposedly, and it's hard to really get a perfect gauge on this, but supposedly the OPEC as a group is sticking to this reduction in supply. And that's part of the reason, Seth, one of the thoughts I have for 2017 is, and I call this the OPEC put, is that we do kind of have a floor under oil prices, and unless that agreement breaks down, we have a floor. But I think we also kind of have a ceiling, which creates this range for oil prices in the $50 to $65 range. So I think that U.S. oil production, U.S.-wise, which we're not part of OPEC, that continues to grow. And then if you really think about where, if you dovetail what Trump's going to do, his administration is going to revitalize more. There are more than 24 pipeline projects, Seth, that have been shuttered, and they're going to get right back online in the beginning of the year. So you're going to have you're going to have more and cheaper ways to move oil around the country, which I think will actually, again, put a lid on where oil prices are going to go. So in some respect, we have a floor because of OPEC and their supply constraints. And then I think we have a ceiling because we're going to have a lot of oil here in the United States. It's going to be easy to transport it. So it's going to be hard for oil to go back to that $70, $80 a barrel. So I think we're in a range, Seth, and I think it's the first thing to understand about where oil is going right now. If there's a huge difference between the oil and gas companies and then the way they actually manage each individual business. I mean, they've got how they structure their leases. You've got the geological data that they have on their particular acreage. You've got how much debt they have. And then when that debt becomes due, it's like, hey, when is the maturity schedule for all this debt? And then you've got the capacity or the takeaway capacity and infrastructure they have on their acreage. Now, I think that's going to get better as a measure because of all the new pipelines that are going to come back in America or get back online or get built, if you will. But so there's a lot to think about, right? So I look at one of the most important, one of a few really important areas to be invested in is these pipeline companies and that business getting better and more efficient over the next year or two. If you look at some of these ETFs, I look at MLPI as a pipeline ETF. The yield on that is close to 7%. It's 6.5%, I think, right now. So I like investing, particularly in these pipeline companies. And it's hard to pinpoint just having one or two of them. And that's why for many, many years, I've been a fan of using these pipeline energy transportation company in the form of an ETF. So I would stick with that, Seth, as you go forward as an income investor and looking at oil and gas companies. Stick with these broader based ETFs that are in these particular industries. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.